Fenton here, founder of TickerTank.com. It's Christmas Eve 2013, and I thought I'd act like Saint Nick today and bring you a little gift. Gonna start another 7-part series. We recently did one on selling naked puts, and that was very well received. I've received several requests on another video series for multiple different strategies, but my favorite strategy of all option strategies is a short strangle. So the first one I want to do following the naked puts is a short strangle series. It's going to be another 7-part series, and this is part 1. So today we're just going to kind of reestablish the importance of the core framework, and I've made a separate video on YouTube about the core framework that's really in depth. So I'm just going to kind of make this brief. But the core framework is you need liquidity in the options. So the options market for the underlying must be liquid. So the second piece of criteria in the core framework is a preference for a pre-diversified underlying. Now we're looking here at the screen at UNG. UNG is an ETF that reflects natural gas futures. So it's not necessarily pre-diversified. It's associated with a specific commodity, natural gas in this case. But if we pulled up something like SPY, which is the ETF that reflects the S&P 500, this is an ETF that is very pre-diversified. It basically follows the S&P 500, which is a bundle of 500 different stocks. So movements in individual stocks will not impact the overall bundle significantly. But if you were in that individual stock alone, you could see a significant change to your position in your P&L as a result. So preference on pre-diversified underlying, that's by no means mandatory, but it is a preference. Back to UNG here. No earnings is the third piece of core framework. So want to avoid earnings in these duration-based trades, and this is going to be a video on duration-based short strangles. Not going to be talking about earnings events-based short strangles, just duration-based. So long-term theta decay, volatility decay type strategies with the short strangles. So you want to make sure there's no earnings in the near future, or within the period which you intend to be holding the position. And lastly, in the core framework video, I mentioned you either want high IV percentile or low IV percentile. High IV percentile when you're doing a credit style strategy, low IV percentile when you're doing a debit style strategy. In this case, selling a strangle short, you're going to be obtaining a credit. This is a credit style strategy. You want high IV percentile. So you want your IV percentile up here on the left. It shows 87 in UNG. Anything above 50 is eligible. The higher the better. The closer to 100 the better. And another way you can determine what the IV percentile is, because this is a custom script up here. Another way you can do it is you can go over here to the trade page, type in UNG, and you can expand here this today's option statistics, and you'll see the third one down here, current IV percentile, is 87%. And what that represents is where is the IV, the implied volatility, currently in association with where it's been in the past 52 weeks, or the past 252 trading days, which is how many trading days there is in a 365-day year. So you can see that the 52-week IV high was 45.9%, IV low 28.3%, and currently it's showing the IV trading in the 87th percentile of that range. And if you go back here to the charts, you can see that the recent high is right here. So that 52-week high was put in last week, and currently we've pulled back slightly off of that, but you can see we're at very, very high levels here of IV and UNG. So this is a really good example. This is the candidate we're going to be using throughout this series. So that's part 1 of the video. Just make sure that your core framework is met. Liquidity, pre-diversified underlying is preferred but not mandatory. No earnings in the period of which you intend to be holding the trade. And in the case of short strangles, IV percentile above 50, the higher the better. So the closer to 100 the better, because your IV percentile is never going to exceed 100. So the closer to 100 the better, by all means. That concludes number 1. We'll see you in part 2. We're going to be talking about time criteria.